What's going on, guys? Good morning. What's up? It is Monday. Welcome back to another live stream here with the Everyday Growth Advisors, which is soon gonna change. I have some pretty big news. We are working on a huge change in the background. I kind of have been working on it for a couple of months. But I just wanted to kind of be the first person to tell you that we are going to be changing our name. We're going to be changing everything in terms of the structure of the school. We're going to be having a big revamp that's going to be coming in the next 1 to 2 months. I am super excited. As many of you know, and if you've been watching this stream for a while now, I think you kind of understand that my scope of work has changed over the past 1 to 2 years. Sure, we started with a lot of, kind of courses when I was back in option swing, and then the scope of work changed where I got to work with a lot of mentees one-on-one, which really gave me a new level of fulfillment and happiness because I got to see all of the work that we put in together, within a short period of time really help people out. And I saw the impact and the change of all of that. So in the past 1 year, I have been testing out a couple of different pipelines to maximize our student success, and I think I have cracked the code. So I'm very excited to announce that we will be having some new initiatives that will be coming out in the next 1 to 2 months. I hope that you guys will be staying tuned for the announcements. And with that being said, let's jump into this breakdown. So last week we actually were talking about a weakening semis, and then NVDA came along, right? NVDA came along and it kind of sent SMH from where it was down here, breaking down below, all the way back up here. And then since then, NVIDIA has been kind of hanging out in the upper levels. We've got a bunch of upgrades. The whole market has been kind of just operating on the belief that the AI boom is going to continue to melt to the upside, which it has, and it probably will continue for a little while longer, right? But I think that many people are at the point thinking that maybe this run is happening way, like it's already overdone. Or they think that that the market's over leveraged in terms of where we are. Now, there is no real way to know whether this is right or wrong, or whether this is true or false. The main thing that you need to focus on is the NASDAQ and the S&P 500, along with the Russell 2000, which we've been talking about for the past couple of months. Okay, so digging into the technicals of everything, you will see that the S&P 500 recently clinched and this level here is actually the previous wave 61.8 extension level. Okay, we tapped that and then kind of rejected at the close on Friday, but we still have a little bit of room if we take into account this huge wave from the October bottom to the August top, somewhere around here, right? So if you take this wave A to B, right, this wave here, you will see that the extension target set a new 61.8 Fibonacci extension, which is going to be at 5,300 instead of the original 51. Because we have already hit the 5,100 level, at which we got tapped on Friday. Now is the time where we have to start re-augmenting our targets. We have to start coming up with new levels in which we see possible upside momentum. And there is obviously a lot of pressure on this market to continue the upside movement because of the constant gamma that market makers have to expose themselves to as more and more people get long. Okay. On top of that, shorts keep getting pounded, and then the unwound shorts feed into more liquidity to the upside, which is what is causing this massive wave to the upside. Okay. Now, will we know when things are ready to turn around? Sure, we will. So I will update you guys when I see that happening. Last week, we closed out I closed out a total of $3,300 in profits, which was not a super huge week, but you know what? It's the start of the year. We're going to build momentum, right? And on my $100,000 portfolio, we are now sitting at about $8,000 in profits for the year. So these are all the trades that we've taken, and you'll realize something. I didn't trade every single week. Look, in the month of January, I literally traded 1 week. Why? Because there were no opportunities. In the month of February, I've literally traded only 1-2 weeks, and this will be the 3rd week now, right? So when we are looking at how often I'm trading, in fact, it's very important to note here that I'm really focusing on quality instead of quantity here, because remember, the more mature you get as a trader, you're going to be focusing on less trades to make up for majority of your profits. Okay, that's just the way things go. If you are still in the world in which you must take a trade every single day, then we are in 2 different worlds, and that's fine. If you need help with the mental part of that, you can always reach out to me, and I'll be happy to talk to you about it. While you're at it and you're reaching out to me, make sure you smash the like button, because that's going to help us get this video out to more people. We want to help as many people as possible. Okay, that's our main aim here. Okay, so S&P 500, the main thesis here is that now this 5100 level and this 50, what is this level here? 50, let's just call it 5040, right? 5040 level becomes a support level if we come back down, and we'll have to see how we interact with this level here, okay? And then there is potential upside targets at 5172 and then 5300, which will be the next 2 consecutive upside targets here. If SPX goes for a deeper correction, then likely to hit down into the 4874 and then ultimately down into 4700, which is the previous low here. So there's this level, there's this level as supports. This is into very, very close level support, and then that's your upside target, okay? So you have all your levels in SPX. Now, this week, there is quite a fair bit of data. Okay, there's a fair bit of economic data. So what is coming out this week? We have new home sales today at 10 a.m. We have, more importantly, sometime down the week, we have core PCE. We have PCE headlines. We have PCE prices for year-over-year, month-over-month, and then core prices. That's going to be important. Then we'll have an initial jobless claim, which we'll see the state of the job market again. Once again, that's going to have all kinds of implications in terms of the possible rate hike trajectory, right? And then you have pending home sales and construction spending, which will be happening along with total vehicle sales on March 1st. Okay, so that's your economic calendar. It's quite a big week in terms of economic calendar, but remember, it doesn't mean the market's going to move erratically against the calendar. It's just good to know what the data is coming out, because you have to be prepared, right? In terms of NASDAQ, now let's have a look at this one, right? So if you go back here now, like, go back on the daily, and we start to really pen out this wave structure. And obviously, you can't use this wave which is in motion here. So you're kind of forced to use this bottom wave to this top wave here. So let's see where that fib will kind of stretch out to, because that's going to be important as well. So if you stretch that out, then you'll see that the 61.8 extension here has still quite a way to go. Similar looking to SPX, but just looking at that ratio itself will tell you that now the 17,234 will act as a support here. We haven't quite broken out of the 38.2 extension, so this remains support, this remains support, and then the upside targets are going to be your 18,689 and then your 19,339 here, which will become your 50% extension, and then the 61.8 extension. 50% extension is not a fib number, remember that. This is just a important number to note in terms of the 50% move for the entire wave structure. So that will be upside target on NASDAQ here in the future trading sessions. Okay, so we'll put a little bullseye there, and we'll follow through on that a little later. Now, IWM. Holding very, very nicely above the 199 level, right? Which we have been talking about for the past couple of weeks now, right? And this has been something that's been on everybody's mind. But now with AI taking over the headlines, I feel like this is a bit forgotten and put on the back burner, right? And that's cool. But remember that once this wakes up, it might move pretty erratically. So just so you know, we have longs in IWM. I opened some longs. I deposited money to open longs. Let me clarify that, because this was way too big risk to take on my account. So I took it on a secondary account. And this is a 195 call for December 20th of this year. And I will be making periodic adjustments. Remember that this is more like a share replacement. So this represents about 2,000 shares of IWM, because one contract represents 100 shares. So 100 times 20 is going to give you 2,000, and that's representative of about 2,000 shares. But I'm only risking 45K of capital to get those 2,000 shares. Okay, so this is in some way share replacement for the position later, which I might want to get out of, which will be the IWM shares that I own. Okay, so that's a good way to kind of hedge your portfolio a little bit and not take too much risk on in one instrument. Okay, last week we spoke about the US 10-year and the dollar index, and I mentioned that there was something weird going on here, because the dollar index was coming down, and at the same time the US Treasury was moving up, right? And then this week both of them are coming down, but at the same time, remember, that gives relief to the indices, because the 10-year yield coming down allows valuations to grow, and then the dollar index coming down allows better dollar pricing arbitrage, or rather spending power for dollar. And this gives us a good indication that stocks will still continue to be risk on. On top of that, the VIX hasn't quite been able to find any footing or momentum yet, because no fear is in the market, right? Okay, so I see some charts. We're going to get to those in a second. Let me go through the usual suspects. One that I'm watching for this week is McDonald's. If it gets above this $2.99 and eventually breaks out of 302, the last time we tried to get up from here, we had a false kind of breakout and then a clap back down. And if this continues to move higher, then we may be able to take a breakout trade, which will kind of bet on a price discovery kind of a setup. Okay, so this would be something that I might be interested to play in if we get the right circumstances. Okay, the other one is Snow, which looks also pretty decent. Now this stock is overvalued, but there is a interim kind of resistance at this level here around 245, 246. It's consolidating right here where we are. So if it continues to consolidate sideways, I don't want to play this, but if it breaks above that 237, 238 level, I'm happy to potentially play this up into 245 and beyond. Okay, that would be how I would be looking at this trade. In terms of structure, let's see here. Yep, 242, 245. This will be the 61.8 extension from the previous rate cycle. So that's what I will be looking at in terms of this trade to work out. But these two, remember, have confirmations behind them. Okay, the other one is Apple, which is looking kind of weak here compared to the rest of the market, right? And if Apple does break below the key level here, which is, you know, pretty much around 180, let's just call it Apple loses 180, it's going to get to 175 pretty quickly, or 176 pretty quickly. And then beyond that, it's going to get to 171 pretty quickly. So that's your downside targets on Apple, but you obviously can bounce over here and move higher as well. Your upside pivot would be 185, which would send this to the upside. And then I would be happy to potentially take some 190 calls on Apple. So there's a both bull-bear kind of interplay here that you can go for. Robinhood is another interesting small play, 12 billion market cap stock that is kind of showing bottoming pattern, kind of, I guess. This stock has a lot of upside room, but has a immediate resistance at around 1530 and 1650. So both of those levels are going to be important levels for it to break first before we can see all this potential upside. Okay, let's talk about Tesla, because I know that you guys all love Tesla. It's currently forming a textbook bear flag, or a bear component kind of thing. If Tesla fails this level, which is going to be the 189 to 190 level, let's just call it 189 level. Below 189, it's likely to come down here and retest for a potential short entry continuation, okay? If it bounces on 189 here and continues to move further to the upside, then it's likely to get up to 205 to close this gap that was created on the January 24th. Okay, so that's Tesla. I wouldn't play Tesla until and unless it breaks strongly and firmly below 189 and starts rejecting that level, okay? And then I wouldn't play the upside until and unless it has bounced strongly on this level and moved strongly above 198. That's where I'll be looking. Okay, so that's going to be your key levels on Tesla for this week. And Meta, this one has a huge wave up, right? And it's pretty much in like a parabolic wave pattern, okay? Now, the thing about this is you don't exactly know when the pullback is going to occur. What you'll need to wait for is a weekly bearish candle. A weekly bearish candle or a monthly bearish candle, a bigger time frame candle basically, to confirm that this is indeed in a reversal criteria. And we will follow on with Meta a little later because this is starting to look a little overbought at this area here. And then valuation is also overvalued at this point. So having said that, both of those criteria will allow us to kind of fine tune the entry later on, okay? Okay, let's look at some of the tickers that you guys are talking about. Okay, let me see first. Rich, what's up, Rich? How are you doing? PWR, okay, let's look at that one first. Okay, mid-cap industrials, Bills Power Lines, Associated Tech in US. Okay, cool. Quanta. Okay, I've done business with them before. When I was a financial analyst back in San Francisco, we were contracted with these guys, and they were doing they were doing the power line refurbishment for PG&E at that time. Okay, cool. So this stock looks like it's in what? It's price discovery, right? Yes. Yeah, it looks like price discovery. Yeah, it is price discovery. Okay. Well, if you're just looking from a technical standpoint here, because I don't know head or tails about this company's financials, then you could use a potential extension here because you have your wave pullback there. So let's have a look. Going to this 4-hour and trying to kind of tidy up this chart a little bit. So your where it currently is going to act as a potential rejection zone. If it does, then it's coming back down to 220 in the short run. And we can also pull up the gamma exposure for this stock. So let's do that on our Discord really quickly. PWR, let's have a look what's going on very quickly. So you have a call wall at around $240 and you have a put wall at 190. Okay, and your zero gamma is at 200. So 200 is really where market makers don't want to be. That's not much advantage for them to be at that area. Above 240, this gets very bullish. Below 190, that gets very bearish. But your main exposure is going to be at around your 230 level. And then the next one is around the 210 level. So that's your two biggest exposures, which is going to be 210, 210, 210 here pretty much, right? This area. And then the next is 230. We are probably looking at this area here. So these two areas are going to be your main exposure. Now, above 235, I would say is going to set this off to go further higher at 245 or 260. That will set your 38.2 and your 61.8 extension movement. But I don't think that happens without a pullback. So I would be very surprised if this goes like just straight up all the way. I think it's very likely that it gets a rejection either at 235 or 245, right? And then comes back down to grab some more liquidity, which is around here, right? Where that put wall was. Soak up that opposing liquidity in this area and then potentially go for another wave to the upside. So that's how I will look at that for PWR. Okay, I hope that's helpful for you, Rich. Next up, NASDAQ 100. Jex, I went through that already at the beginning. I hope that was okay for you. If you need more information about the NASDAQ, let me know what kind of information you're looking for specifically. Next is Square. Let's have a look at that one. Ooh, Square is looking interesting. Okay, so this one has a demand zone here. It has a supply zone here. So it does look like it gapped up on earnings, right? I'm not sure what happened to earnings. I haven't read the earnings report yet. But this one looks like a potential move will happen only if it can come down and form some significant demand in this 74 area or 67 area. So if it comes down to close this gap, then you could potentially go long. But I wouldn't touch this here, right? Your risk to reward ratio up here sucks because you have to take on all this risk in order to get this reward, right? This is your reward, this is your risk. It doesn't make sense for me personally. I would stay out of this until it picks a direction and goes. I think if it moves up to the supply zone, it's easier to short it. If it moves down further into 67, 68, that's easier to go long. So I would personally wait on Square before I make a move on this one. PanW. Okay, this one was last week. This one dropped $100. Now listen, general consensus, guys. Okay, I need you guys to understand something. Moments to legendary. What's up? This is the first time I've seen you here in the live stream. I appreciate you taking your time out to be here. Just understand in general consensus, when a stock makes a big move like this, okay, a huge gap of more than, you know, $100, like this is what it was, 20-something% perhaps, or 30% of its market cap. Remember that when it does something like this, it's gonna take some time to figure itself out, okay? And personally, if the consensus of a stock changes so drastically overnight, just from the fundamental perspective, like the fundamental perspective of this stock, I wouldn't want to actively trade it just yet, okay? What you want to wait for is for this to find some kind of a footing, a demand, or some kind of market structure here where you can actually understand. Right now, the only thing you have going for you is to look at a potential Fibonacci retracement, which would take this wave all the way down to here, and that is your 38.2 retracement, which it has been finding some kind of reprieve at, right? So if you want to go and find demand in this area for it to move further higher, then it's likely to bounce here and then move up to 291, which is the next level to the upside, right? If it rejects this 291 here, which is where it's opening up at today, for example, then it's likely to come back down to 270. And so that's how you can play it in the short term if you really feel that you really want to, okay? My view is I wouldn't touch this until it forms decent amount of price action that gives you an understanding of where it's about to go. More importantly, if you look at the gamma of this one, then you'll see that the call wall is probably disrupted. Yep, I thought so. So you see the call wall is below you, right? Look at that. The call wall, right now pre-market pricing, it's at 288. Without even looking at the gamma chart, I can tell you what's like the likelihood of it being below it, right? Because what's happened here is that calls have got completely obliterated, right? And so the natural positioning here will be for people to own more puts than calls, okay? And that doesn't mean just for general shorting purpose. I'm talking about for hedging purpose too. So if people go long, they're not really going to want to stay long that long. So 266 is your zero gamma. Not market makers want to be above this level, want to be neutral at this level. Your call wall's at 282. That's slightly below you, which is where we kind of closed on Friday. And then you have your put wall at 250. Which is going to be kind of here, which is your next level down for support, right? So below 250 here will be further bearish, and technically above where you are right now is bullish all the way till you get up to 291, which will be a potential rejection level, okay? So I hope that helps you out in terms of PanW. CrowdStrike, okay, let's do that. Haven't seen this one in a while. This is also one of those stocks that went nuts recently, right? Okay, so You know what? I just want to take everything off here. It's just so much easier. So this has run very, very strongly. Let's have a look if it has actually breached some key levels. This level has already been breached. This level is exactly where the 61.8 is. If you take this big extension here, then it has more to go. So you can see how the Fibonacci interacts here, right? See, if this is your starting point here in terms of ratio, right? Remember, many people overcomplicate this thing, but you can't take this wave here because this is a huge wave, and drawing a Fibonacci on this wave is just going to be inaccurate in most cases, right? But you have a bunch of bigger waves here. For example, if this is your base case for extension and you want to know where price is going to the upside, then your base has to go from a bottom, right? And then you can choose this as your peak, this is your peak, this is your peak, because you have a choice of this wave, you have a choice of this wave, or you have a choice of this wave as three interacting ratios that will allow you to see the projection of extensions here, right? For those of you that don't know how Fibonacci's work, that's the essence of a Fibonacci extension or retracement, right? You're trying to find ratios that complement previous wave structures. Okay, so taking this into account all the way up to here, which is the most important one. Actually, sorry, you know what? Let's move it to this one because we had a rejection right there, which is nice. It's a clean rejection off the 61.8 right there. And it looks like here we found support at 23.6, which means that there is a high chance that if this continues and breaks above 335, then it's going to go for 100% extension. So just based on the rules, if we bounce in 23.6 pretty strongly like this and 38.2 as well, then a break above 335 will give us maximum extension at 391. Okay, that's just the rules. Now, if we fail to break and we reject one more time in this area, then you're opening back up to 299 and opening back up to 277. That's how I see CrowdStrike here now. I would use all of these as pivots and then structure your trades based on the price action that you see on smaller time frames. I personally wouldn't day trade this one. I would just swing trade it, if anything. Okay, Meta we went through, PWR we went through, Mara, that's the other one. Mara. Okay, so this one's largely dependent on Bitcoin price. Okay, so because it's largely dependent on Bitcoin price, and you know Bitcoin has been moving pretty nicely. Let's have a look at where the levels for this one is, because I haven't looked at this yet. If I were to guess the call walls above us, 24, exactly where we are, right? That's where it closed, that's where it's opening up. Below 2150, you start to get bearish. Market makers will be incentivized to buy puts, or rather it will cause kind of a short situation. So Dylan, I think you're looking all the way, there's not really much edge here in terms of gamma exposure. Where we are is where it's tapped out in terms of market maker exposure. But price action obviously will be still king here. So personally, I don't like the setup in terms of risk to reward ratio. Look at where you are. This is an equal upside, equal downside scenario. Therefore, you're risking 1:1. There is no good risk to reward ratio here in terms of the upside downside trade that you should take. Market just opened, so okay. So Dylan, oh, you have shares at $15. Oh, you're good then. Yeah, you're good. I mean, just hold on to your shares for now, I guess. I don't think the Bitcoin run is going to be over just yet. Remember, the Bitcoin halving happens sometime in April, May, right? So I still think that there is a decent run to be made in Bitcoin until that happens, okay? But if you're asking me about this trade from a technical perspective, like in terms of like, okay, is there any upside downside here? I personally don't think that the upside scenario or downside scenario is there, but what I will say is this is forming a very obvious inverse head and shoulder here, right? You can see the left shoulder, the right shoulder, and then the head here. So if this breaks the neckline, which is way up here, like at around, let's just call it 29-ish, right? Because you want to go somewhere around here, not here. See, a neckline can't be up here because this is way too high. This would be about your neckline. So 29.50, let's just call it. is where you want to keep a lookout for this one to go long above this level. Okay, that's what I would say about this. Okay, next, Disney. Haven't looked at Disney for a while too, so thanks for bringing that up. Thanks for all the tickers today, guys. I hope to see you back on Wednesday, where we'll have another live stream like this. So make sure you bring tickers on Wednesday again, and we'll go through all of them. And personally, I don't mind sitting here and talking to you guys and going through all these. So yeah. Okay. Disney, once again, big explosive move after ER. Moving back down, some profit taking going on, but ooh, this daily candle is kind of interesting. That's pretty nice if it can gather some momentum. Looks like it got bought up in a little liquidity engineering move here. It needs momentum to close back over the 108 level, this level here. Let's see, 108, 50, that's the level. So, oh, sorry, hold on one second. Someone's giving me a call right now. Sorry, I had a little phone call. But in terms of Disney here, you really want to wait for a break above this 108-ish level. Honestly, even you can go up as high as 109.50 before you see some bullish momentum take over this. Where it is right now is still in very rejectable levels. If it comes up to 109.50 and rejects, that's another thing you've got to be careful of. So I would use this 109.50 as a key pivot point. If it breaks above and starts forming a base here, it's going to likely go further higher. If it starts to move further higher here and rejects here, starts making lower lows and breaks this low, then I would initiate the short position. That's just simply how I would play this now based on the gap, right? It has big, like these levels up here at, I don't know, 125 or something like that. Yeah, 125. And then another one at 117, 118, which is also a little disruptive to the price action. So I wouldn't touch this until I see more clarified price action here. Just giving you a heads up. Next and the last one is ANAT. Sorry, Barney, just was trying to get all of them done in sequence. Arista Networks. Looks like price discovery. So what are we looking for here? I mean, what is there a specific question you asked me? Because this is a very messy chart. Are you in shares? Are you looking to go long? Are you looking to go short? Maybe you can give me a bit of idea of what you're asking, or clarify what you're asking, and then I can give you more information here. If not, looking for a short. Okay. So let's have a look at where that gamma is also. Very quickly gonna pull this up. So 250, 267.50 is your call wall, so you're still above that. I wouldn't want to bet short on this just yet, personally, just based on my own analysis here. So I mean, obviously you had a big like fake out candle, and then you had earnings that came out, and I'm guessing that this company had a bit worse than expected earnings or something, because it looks like it gapped down after earnings. So investors didn't really like something about it. But just based on price action, this is very messy for a downside scenario. So let's look at this in terms of the wave structures here. We have to be so careful as to which wave. So hold on. First of all, I think that this is corrected more than 50%. So let's have a look. If I put it here, yeah, it has corrected 50%. Let's see if we can use another lower wave here. This is another one. We could also use this one down here. No, let's not use that one because it's too far. This one looks decent. I think this one is probably the best one. Okay, hold on. Oh, I'm not sure what just happened to my mic, but it got cut off. So here, I think that if it continues to reject 275, you will see a better chance of shorts. If you don't see rejection at 275, then you would probably initiate longs. So 275 should be your key pivot here. That's what I'm saying. That's what I would go for here. 275 is your key pivot. And then your key bounce level is going to be 261. So these two key levels here is what when you want to look at. This for a potential bounce, this for a potential rejection. This to go bullish, this to go bearish. The bearish scenario is less likely than the bullish scenario because of risk to reward ratio opportunity. If you go bullish here above this level and starts building a base, you have decent risk, which you can offset and take a very short stop loss here. With the short position, your reward is likely to get stopped at 251 if buyers step in. So that's the way I would look at this. Your key pivot is 275 for bullish and 251 for 251.90 for bearish. All right. Okay, guys. Thank you very much for taking the time out to be here. Make sure you smash the like button before you leave. I appreciate it. And I'll see y'all on Wednesday for the next stream. Once again, Discord 14 days trial, you can join. And let's see. Sorry, my last question. When would it be a good time to reach out to you on Discord? I would like to get a one-on-one call with you. Let me know. Okay, so best way to reach out to me for one-on-one is on IG. Okay, I reply all the messages on IG. I filter through all of them. You can reach out to me today would be good. Don't delay because I am going to be starting a new intake of mentees for the one-on-ones. So if you are keen on that, I suggest you book a 30-minute intro session, like an intro call with me first to see what you need help with and how I can help you, whether it's even the right fit for you. And let me kind of assess where your level of, your skills are, and then we can go from there. So reach out to me on IG or Discord, either way, and then we will kind of schedule a 30-minute call, and then we go from there. Does that sound good? For anybody else who is looking for one-on-one sessions, just a heads up that I'm going to be offering as I mentioned just 1 or 2 weeks ago, I'm finishing up the first wave of students for this year, and I'm going to be embarking on the next one. So for those of you that are interested, you should probably reach out now because I'm going to open it up to the public, and then after that, I'm only going to pick altogether 10 people max for the mentorships, okay? Which is going to be one-on-ones. They're not going to be a classroom setting anymore, okay? They're going to be one-on-one help that is dedicated to helping every single individual. Okay, so I will see y'all back on Wednesday. Take care. Peace out. Thanks for joining, and we'll see you on the next one. Bye-bye. Love y'all.